ATFX joins me. Nick, I'm probably going to interrupt you in about a minute when we get the job started, but just in terms of that momentum in the Aussie back above 65 cents.
Yeah, it's jumped nicely, and that's come on the back of the dollar selling that we've seen. I think there's a little bit of options interest about that 65 level, but I think this jobs data is fairly crucial. It's been interesting, it's been volatile recently, so a lot of the banks are actually pushing for a higher print. I think CBA's coming in at plus 30,000, markets around about 20,000. I've been speaking to people today, the variations from like minus 15 to plus 35. So it's going to be interesting to see what happens. And we will get a reaction in the Aussie when it comes through.
Absolutely. But what is this chart showing us at the moment? I think that actually might be gold.
I think that's gold, yeah. I think
just going back to the Aussie one, what was that one showing us? Oh, we don't have it. But what were you seeing in terms of some of the trend levels there for the Aussie?
Certainly, the Aussie's been moving down from what we've seen over the last few weeks or so. We've had a little bounce off that lower level, but a lower number today could see a break to the downside.
All right. Now we do have the jobs number. So 14,900 jobs added. So lower than that expectation of 20,000 there. The September unemployment rate, Marius, let's bring up our Aussie dollar chart and see how it's tracking. The September unemployment rate at 4.5%, so Reuters was expecting 4.3%. Full-time employment up by 8.7 thousand, and the participation rate there at 67,000. So CBA, as you mentioned, Nick, was expecting 30,000, that 14.9 thousand, about half that, and still below what we were expecting from Reuters of around 20,000. So no surprise you're seeing the Aussie there dip below 65 US cents.
No, and that's a little bit of a harder dip than I would have thought, because it's only 5,000 off expectation. But I think given the recent trend, then traders are looking to sell rallies at the moment as well. The dollar's still pretty much on the front foot, regardless of what we got last night, which was a little bit of a retreat. Dollar's largely been moved by dollar yen moves in the last couple of weeks. But the Aussie, I think that number kind of it does put us on the back foot again. We're at 64.88. I think we break down through 64.80, 64.75. It could extend the move down to 64.50 in our session.
And with that unemployment rate ticking up to 4.5%, I mean, does that then maybe put rate cuts back on the table for Melbourne Cup?
Well, it could do, couldn't it? Unfortunately for many FX traders that have to sit there on the desk while everyone's out enjoying themselves. But I think so. I think the unemployment rate, that will be the headline that we see on the major, on the terrestrial news channels later on. That could put a lot more pressure on the Aussie as well. So I think for today, certainly anywhere above 65 cents, they'll be looking to hit it again. If we get a break to the downside, it could extend. Yeah,
absolutely. All right, well, let's move on to gold. I mean, it just continues to break these records. We had a little sneak peek of your gold chart earlier. What is it showing us?
It's just relentless. It's done over 20% since it broke through the previous high on the 2nd of September. And this chart, and that's why I threw out this chart, it's everyone's talking about it. No one's yet to give us a really good explanation of what this move, and personally I think there's some big portfolio reallocations from big central banks, massive players, because every single dip that we get at the moment is a buy gold opportunity, and every break is a buy gold opportunity. It's a crazy chart, and it's actually traded technically really well on the daily charts. You can see where it broke early September. And that 20% move, it's kind of unprecedented. But I'm sure we'll find out soon what the real reason behind the move is. But it's just chugging higher.
Yeah, I mean, every time I interview someone, they've got 5 or 10 reasons why gold is moving higher. As you say, there might be one key one, but a lot of it is safe haven. Meanwhile, the yen not really showing much of a safe haven asset. It's falling against the dollar.
It's falling against the dollar, yeah. So once again, I mean, we've had it. It has gained some ground back from where after the initial political surprise that we got the other Monday. Now it's in flux. We need some certainty from Japanese politics, and until we get that, as you can see, we're actually mid-range really on the bigger chart, on the daily chart. So we will see more movements in the yen, and it's doing 100 points a day for us as well. So it's a tough trade at the moment, and most of the market's a tough trade as well, because we're moving away from fundamentals, and geopolitics is really dictating moves in currencies.
Okay, let's have a look at some of the other moves as well that we are seeing. The euro kind of getting towards session highs at the US close. What's it showing
it's
you?
just on a bit of a resistance level on the shorter term resistance on the daily. So it's going to be interesting to see where the euro goes. There's a trading opportunity there in the next few sessions. You can see it's coming into that resistance around 116.50. a break there could take us back up to sort of the 117s, and that top line's around 119. But I think we're going to remain range bound until we actually see a return of the US data, because we're flying blind at the moment, largely on the majors. But geopolitics can move it and will move it percentages with these updates from the US, from Japan, from Europe.
Indeed. And cable?
Cable, it's a little bit perky, isn't it? It perked up a little bit. Jobs numbers the other day were a little bit mixed. I think they kind of... there was something for everyone, but it bounced nicely last night. And as you know, with cable, when it bounces, it's not 20, 30 points like we sometimes get in the Aussie. It's 100, 150. So we're back up to 134. I think probably people are looking to fade that rally up to 135. It's once again, we need the US data, but sterling, it's holding up there nicely, I think, and maybe a trade on the crosses.
All right, Nick, always a pleasure. Thanks so much for helping us break down the jobs data as well. Nick Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next time.